It's time for todaysstocks.com with host Pat Bolland.
Duane Parnham joins us. He's the executive chairman and CEO of Madison Metals. Duane, great to see you again.
It's an honor. Thank you, Pat. How you been?
Congratulations on the listing on the CSE.
Thank you. It's another achievement, another founding company of mine that we were able to get listed by an IPO. Madison Metals, symbol GREN, listed on the CSE. So we're quite pleased and proud to present this to our shareholders.
Yeah. Tell me about the exciting opportunities that are being presented specifically in Kenora and Namibia. And they're worlds apart, literally.
Yeah, well, you know, my experience is quite global. We have the Madison Metals as an SPV that was created through a series of transactions that have been very rewarding to our shareholders. And this is another example of us using those strategies to assemble great projects in the uranium space, which I'm familiar with, and Dr. Lane on our board and our uranium advisor have been able to assemble. So yeah, Kenora, Ontario is our listing project. It's a project that we worked on back in the mid 2000s. And then of course, my experience from Forces Metals with Valencia gravitate me easily to Namibia, where there's more exciting opportunities there.
Are they both open pit style?
Yeah, so we're using a geological model called, similar to the Rossing, which is probably the largest open cast uranium mine in the world. It's been operating for better than 48 years, consistently producing about 5,000 ton of U3O8 a year. So that model is not so much popular to the Canadians because we have these high grade, McArthur River type deposits in Saskatchewan, which Dr. Lane, by the way, was familiar with when he worked with Areva. But these Rossing type models are very, very exciting. They are abundant and they're around the world. It's just nobody's really looking for them. And we have particular expertise that enables us to maybe fast track one or two of these opportunities in Madison.
What are the challenges that are unique to both? And I'm thinking about geography and transportation and regulatory and those kinds of things.
All those things very important, environmental very important, but grade I think singly is the key factor to a Rossing model. These are low grade deposits. They're economically sensitive. So in low price uranium environments, they're not so popular, but when price of uranium, which we feel we're in a very strong fundamental situation again, where we're seeing uranium prices increase. These types of deposits that we know of become exciting again, and ones that people should pay attention to.
But no challenges getting the product to market or refining or those kinds of things?
Metallurgically, very simple. The grade is the important factor in them from the economic point perspective. But a mine goes through the same challenges regardless of if you're looking for uranium, gold, copper. All of those other elements are bringing these into productions to play a factor into the success of the project. But I like Namibia, particularly because I have experience there, 30 some odd years, developed Valencia from a historical resource to a licensed mine. It's in care and maintenance, waiting for the economics to turn, but very, very familiar with Namibia. It's accessible. It has all of the elements, the right jurisdiction, political support, and everything that could make a successful story out of.
How did Kenora drop into your lap then?
Kenora is a project we worked on in 2007. It's got all the geological earmarks of Rossing. It's a district scale land package. There's an old historical uranium mine on the project. So it's good hunting ground, a little more challenging than Namibia, but nonetheless, it's a very interesting project for us.
How so more challenging though?
Oh, access. So, it's Canadian, rugged terrain. The landscape here is a little bit different than Namibia in the sense that, you have indigenous groups that also play a factor into the success of the project. access to particular areas because of the terrain, the water, and all that stuff. Where Namibia, we basically drive from one end to the other of the country, and we can explore a lot easier there.
Okay, you touched on them briefly, but talk to me about the fundamentals of uranium and the uranium marketplace right now. Where are we in the, I guess you wouldn't call it a cycle, but in the evolution of uranium?
Yeah, well, I mean, look, look, in 2006, when I first started in the uranium business, spot price was somewhere around $10. And we got our hands on Valencia in Namibia. It was a 20 million pound historical resource. We applied our managerial, technical, financial expertise, and today it's about a 200 million pound deposit. But during that time, Forces was built with $15,000, $45,000, somewhere in there. As a startup, we got it to about 860 million market cap during a time where the cycle of uranium went from 10 to basically $140 a pound. And what we're seeing today is another similar cycle whereby, we've had another depressing uranium market over the last 10 years or so, and we're starting to see those fundamentals strengthen up again. A lot of it's by the fact that the EV market is starting to play a big factor into energy costs, and just demand is increasing. A lot of countries are classifying uranium as a green energy source. So there's just a lot more investment attraction to uranium these days. You're also seeing a change in political sense of where uranium is now being reaccepted as an energy source. So I think those fundamentals will continue to be strong. And I think it's at a time where, mining supply is decreasing due to these low costs. So I think we've got another great economic storm coming, and I see, upside in spot price of uranium.
It's amazing how the geopolitics play into the stock market. So in particular, you've got lots of experience in the mining space. Is it different having a public company that's in the uranium mining space?
Well, and there's so few of us. So I think from a competitive perspective, it's a good time to start another uranium company. When we did Forces, basically there were 5 uranium companies. In under a year, there were 500 uranium companies. We brought Forces from one of those no-name juniors to maybe top 25 at the time, because we licensed the uranium mine, and we became an attractive proposition from the production perspective. And I think Madison has that same opportunity, where in Namibia, in fact, where we've had a lull of exploration for the past 10 years due to the moratorium that the government inflicted on uranium exploration. And during that time, with lack of capital and lack of exploration, a lot of those really, really exciting blocks and concessions were let go, handed back to the government. And now these really, really key blocks are now just been redistributed to personalities like myself that have shown success in the country. So the ground.
Talk to me about this listing too, because you touched on the listing on the CSE. Was there anything unique about that listing?
No, well, it was an IPO. It was a transaction that we put together through a series of asset sales, and Madison Metals was an SPV that was set up during one of those transactions. And then it was just left as a reporting issuer with a little bit of cash, and shareholders looking at me saying, Duane, what's next? What do you think? And I just found this uranium market quite interesting, and we had access to these great projects both in Kenora and in Namibia. So I think the opportunity is really, really good for the shareholders.
Well, let's talk about that opportunity. What do you see as the next steps, or at least the future, for Madison Metals?
Yeah, so right now, pound in the ground seems to be the investors' way of judging whether these companies are judging the value of these companies. So we're starting with 9 million pounds of compliant resources in the ground in Namibia, and we're exploring and expanding those. And I think with our technology, both experience in Namibia, access to the ground, the quickness of which we can drill, And of course, using technology that can assess the quality of the uranium quite quickly. So I think that's where the opportunity is going to be, is taking this from a 9 million pound to a couple hundred million pounds.
So the short-term opportunity is in Namibia. What about Kenora? What's the timeline on that?
Kenora is drill ready. We did some work past summer. We've been on field doing mapping and trenching and doing some sampling that way. So we have 3 or 4 really key areas of this very large land package that we're ready to drill. So we're just preparing for a drill program in Kenora also.
Wow, sounds exciting, Duane.
We're gonna build it by the drill bit, and I think that's the only way to take it from 9 million pounds to a couple hundred million. In today's world, they're giving us about a buck a pound in the ground. So, you know, the math is real easy on this. So it's we know what we need to do. We can do it. We can do it real quick, and I think that's just gonna translate to shareholder value rather quickly.
We wish you continued success. Thanks so much, Duane.
Thank you very much, Pat. Have a great day.
Duane Parnham, Executive Chairman and CEO of Madison Metals.